Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, plenty of volatility in Friday's market trade with more follow-through in the bean oil complex. Corn and wheat were down. We had a decent day in soybeans and meal, but overall, plenty to discuss. Livestock trade had a good day as well on Friday to wrap up the week. Joining us now to provide his perspective on the markets, DuWayne Bosse, Bolt Marketing, is with us. DuWayne, good to catch up with you again, sir. Hope you had a nice Thanksgiving holiday.
Oh, absolutely. I mean, as a producer, Thanksgiving up here is always, it's a 50-50 for me. Either I'm done harvesting and I love the holiday, it's one of my favorites, or we're still harvesting and I'm mad that anyone's playing Christmas music. But we were done plenty early this year, as you know, so we got done and it was a good holiday full of some football, some hunting, and even some ice fishing already up here. So yeah, so I'm having a good old time other than the markets this week.
Yeah, rough week in the markets. Let's dive in and talk about that. I think just a 1,000-foot view to start before we really dive in here. I know the big news of the week was the EPA news, and that really flooded into bean oil Thursday, Friday, which
Right.
A lot of folks in the biodiesel side just weren't happy with the announcement there. I know that led to the washout, but yet beans kind of held up on the day Friday.
Right.
Overall, what's your take with everything we saw with that EPA news and just that soy complex as a whole to wrap up the week, DuWayne?
I think, the biggest summary I have from watching the trade this week is that here we are in the holiday, the fourth quarter trade. You get what seems like kind of smaller news to the average trader like myself, like this EPA news, which I mean, it's a big deal, but they are just suggestions from the EPA and they're just mandates of the low end, right? So, I mean, if it's economical, we're going to crush the heck out of beans and it doesn't matter what they have for suggestions. But boy, that just tanked the market this week. And then, yeah, today, Friday, the corn market down hard on what looks like fund liquidation. And that's, I guess, my point is, it's the fourth quarter. You get odd, big swings in movement for what you think is a very small reason. So it's the fourth quarter. Maybe funds didn't want to be as long corn as we thought going into maybe Christmas. So maybe they're just decided today is the day to get out of some, because boy, did we break some chart support and looks pretty ugly there. But yeah, like you mentioned, beans are going to finish higher for the week. Believe it or not, after all this thing, which I can believe it, it's been just a crazy week.
It has been a crazy week. Well, and corn and wheat saw some downward pressure there on Friday. And I think just for us to really dive in this corn market, I'm a little worried about now that we've broken through some key support levels, and I see corn on the board below 650, getting into that 640, 630 range. I know there's a gap or two left to fill below here yet. What's your thoughts on this corn market? Or am I just overreacting? Am I justified in being worried about this corn market?
No, I think you're dead on. And that's coming from a long-term corn bull that I am. But no, today, a couple things that bothered me. One, we broke that support you mentioned, long-standing support, and we did it with really high volume, or decent volume anyway, moderate volume. So that's saying that, this wasn't just that Friday trade after Thanksgiving and nobody knew we were open type trade. This is a big day. And, breaking that support is going to make the chart look bearish. And the funds that are long are going to say, well, gosh, we're long. If the chart looks bearish, why are we long? And might want to exit. So you're right. I'm kind of looking at, some of those areas. I think there's that gap in March corn you mentioned. That's around that 638. Of course, we're closing this week right around the 646 area. So that's, another 8 cents lower. I'm kind of eyeing the 623, which is a 62% Fibonacci retracement level. So yeah, for being a long-term bull, I'm talking pretty bearish this morning after today's action. So yes, you absolutely have every right to be nervous about this corn market here.
Well, and I wonder too, thinking about farmers selling in this corn market here heading into the end of the year, I wonder how much that is playing a role into this. And, looking at what end users are looking for, and export demand has been pretty slow for corn. So, you're a farmer. Walk me through just kind of the farmer perspective into this corn market here as we look to wrap up the end of the year. I mean, what is the general thought across the countryside, Dwayne?
Well, I think in general, the farmer was bullish yet, had a decent amount of grain, don't need to sell because they've got plenty of cash. Because, I mean, let's be honest, if you had the bushels, if you had the yield, it's a very profitable year with these prices. But what happened last couple of weeks, or at least in some areas, we had something called free DP open up, and that usually is the death to any strong basis. And it seems like, again, it kind of killed the market here. What that is so, okay, farmers can go ahead, haul it into the elevator. They're not going to have to pay storage. And, farmers like to core bends in December. And if it's free DP, well, they start hauling all of a sudden. If the weather's good, let's just keep hauling it in. So obviously the basis took a little bit of a dip the last week. I'll look again this weekend to see how the basis did in the region. So that's a little negative. But as a farmer perspective, though, they're going to see a down day like this. And, I mentioned earlier, they don't have to sell. They're not going to sell now. So, yeah, they maybe will haul the bushels in, and that's maybe not the best thing to do because the basis will just widen out once the elevator has it. But they're not going to be avid sellers here. So, but that darn free DP got me again. Once I heard that announced, I should have just hit the sell button on the futures market.
Well, and I think as well, some of that old adage maybe of, throw it in the bin and lock the door, and that's my marketing plan. I just wonder, though, on the flip side of that can't necessarily be your marketing plan with how volatile things are, Dwayne.
It's worked the last 2 years, and that's sometimes about the worst thing that can happen, right? Is, last year I worked the store during profitable levels, and I made even more money come summer. And so you're right. It's not a great marketing plan. I understand it a little bit here, and there's still going to be a ton of farmers that have that did not move any grain, and they're going to just sit on their stuff till next spring, summer. I'm going to say, Jesse, they're probably okay doing that. Is that a great risk management plan? Absolutely not. No way. But that's a whole nother episode. We can go into proper risk management and put options and what they should be doing. But we still have tight stocks here in the U.S. Now, yes, South America is looking to grow a big crop. But remember, we haven't even planted that second crop of corn in Brazil yet. And so a lot of unknowns there. And what happens when we say the funds do exit a lot of these long positions, or at least a decent portion, and we drop down to the 620 area I'm mentioning, more than likely lower prices start to actually generate a little bit of demand. We know we've talked, in length in your episodes about, we're high priced, right? Ukraine's cheaper than us. There's going to be a moment in here in a couple of months where we are the only game in town as far as the export market. Yes, Brazil's selling some corn now, but they'll run out of that pretty soon. And if we dive down in prices, the other thing that really crashed this week was the US dollar, lowest level we've seen since June. That makes our commodities a little bit better. So I think if you're going to do the store and ignore, which, okay, maybe I have to admit I'm doing that a little bit on my farm here, I think you're okay because we still need to buy acres next year. But better be careful. Today was not a good day. We better see how Monday goes. And if the funds continue to liquidate, you better do some risk management. If you're going to store that grain, buy some puts, sell the board for at least this month and see what happens.
Well, Dwayne, I think as well, not just this current crop, but thinking about 23, 24 even. There's some folks who are even looking out at that crop as well and some of the prices. And I know with inputs, it's a little hard to think about 24. You can maybe start thinking about 23. But thinking about this, I come back to some folks maybe need to look a little bit differently and look at more from the business perspective as, okay, hey, if I could book out some prices for next year for 23 crop, I've already got some inputs on the board. I could pencil this out. I mean, talking risk management, that's something to think about. What do you think about that?
It really is. And, there's two different guys you can probably interview here. You got the trader DuWayne and you got spreadsheet DuWayne. And spreadsheet DuWayne looks at the profitability and goes, well, this is a no brainer. It's just, let's just sell and move on. And, I talked earlier about a lot of farmers having a decent amount of cash. They had a good year last year. But that also probably means they're doing some tax prep right around now. And a lot of their tax prep might be, you need to spend some money. Okay, well, they can't buy equipment right now. That's pretty much tough to find. So they're buying a lot of that seed, chemical, fertilizer you just mentioned. Well, if you're booking all that for next year at these relatively high levels, it is proper risk management to go out there and do something for that 23 crop. And yes, I'm a bull. And I think, even if we dip lower here, I think we'll rally past these points eventually. And I know when a lot of bulls hear that, they just click the rest of the show off and go, oh, he's bullish. It's okay. But there are, Jesse, things we should do with the buying puts and the risk management here in the short term anyway to see. So no, you're right. I mean, if you're booking all that stuff, you should do, 10, 20% of next year's crop is okay to sell it, especially because spreadsheet DuWayne looks at it and says it's profitable. If it's profitable, the banker likes me to do something.
Well, because there's so many factors out there too. We've hit on South America just a little bit. We're watching weather. Brazil's weather is fairly good so far. We still got a long ways to go. Argentina's had some issues, but the trade seems like it's largely ignoring the Argentina issues and dryness there so far. But you think South America, you think the Black Sea issues, not to mention U.S.-China relations, et cetera, et cetera. So there's so many things that are still out there in this market that even though it's getting to the holiday season and we can tend to get complacent here, a lot of things still in front of us that we are going to be watching here, especially as we get into the 23 calendar year, DuWayne.
Yeah. And, follow the trade action. 2 days ago, my bullish attitude looked really smart. The soybean market looked great. The trade action looked beautiful. I mean, you've got this upward trend. You're up on the week. But let's go back to corn. This is horrible trade action today. I can be a long-term bull, but sell the board heavily on Monday because the market isn't concerned about Argentina's drought. And just ride the short position for a while, do risk management, exit it later. And I've still got my grain. I've still got upside potential for 23. So yeah, I follow the trade action. Like you said, if we can't rally today, what news are we going to throw at it next week? And I guess the only thing is what you mentioned, the Argentina drought. And boy, that is dry. I'm kind of surprised we can't get a little bit more of a kick from it, but we have to remember, these markets trade based on what funds want to do. The large trading funds, not what DuWayne Bosse in Northeast South Dakota think. God, I'm going third person a lot in this interview. It must be time to wrap up the week, Jesse. But my point is, if the funds don't want to be long anymore, the corn market, we're going to go down 50 cents.
Good things to think about there. We're not quite done yet. I can't let you off the hook just yet. No, DuWayne. Wheat market, a rough day in wheat, more chart damage there. Man, I know we got dryness in the Southern Plains. We got the issues in Argentina, yet this wheat market just is churning lower. I mean, what's your thoughts here with wheat? Is this the canary in the coal mine type of situation? What are you thinking in this wheat market as a whole?
It could be. There's a few people that have talked about, is this wheat market and that chart giving us signs and indication that wheat's the leader and corn and soybeans are going to follow that. I'm concerned about it. But if I break down the wheat market just by itself, I guess, Jesse, I'd have to tell you I just don't have any bullish news until we get to next spring. We've had the poor winter wheat conditions. We've had the drought in the Southern Plains. Yes, Texas got some moisture here last week, but Kansas, where we grow most of the winter wheat, horrible conditions, right? Couldn't rally the market. Oh, okay, we got that done. Ukraine, Russia situation. I mean, they're going to continue to move wheat out of the Black Sea area no matter what. Australia has the flooding, but that's more of a quality issue. They'll have the bushels. India is looking to raise a monster wheat crop. So this is the crop I am bearish. I can finally talk bearish here for you. And it's not that I think it has to be sold and it's going to tank. I just have no reason to be bullish. And when the trade is that way, when there's no reason to be bullish, it's just so easy for the sellers to take control of the market and push it down that much further all the time. So I think that's kind of what we got going here, Jesse, is we just don't have a reason to go up. Therefore, path of least resistance is lower.
Let's talk livestock. Cattle market, DuWayne, steady to higher cash trade again this week. And you look at futures on Friday, fairly solid day with feeders especially taking advantage of the break at corn. As you look at this cattle market, though, getting into the month of December, weekly export sales were all right on Thursday. I don't know what to make of this cattle. It just seems like we continue to churn higher and higher with cash. Maybe the leader here in this cattle market. What do you think?
Yeah, no, I think this is a very strong market. Looks very good. Yeah, exports were just so on Thursday, but the number one buyer of beef was China. That couple of years ago, you just never saw that. This year, they've been a small buyer more and more. I mean, they're going to buy a record volume for China because they just never bought before. But just think of that. If China's going to now start to buy our beef on a consistent basis because they like the product, that's a really good thing for our livestock producers out there. Yeah, the futures market isn't soaring to new highs on the fats, but it's a continual upward trend. It looks okay. I mean, yeah, I'm a little disappointed. Wish we could rally a little bit faster, but these markets, when they do that and rally too fast, then they sell off again because they get overbought. This market is not overbought. Looks very good. Like you mentioned, cash cattle trading higher this week. I look for it to continue in the fat side of things, and feeders. Honestly, this morning was just a little bit disappointed because if the corn market's going to crash this hard, why can't feeders be up $2 to $3? But they did rally into the end of the day, and we got some triple-digit gains in the front month contract. January around that 182.5, but that cash index went from 74, 75, going sideways for a long time to it is spiking up to that 180 mark now. And up here in the northern plains, these cash feeders are just white hot. So I think this feeder market continues to go higher. I know I've said that before, but I'm going to say it again. I think it's got to go higher. That's one thing, with feeders not going up $3 today, kind of made me wonder, is this corn sell off for real or not? But again, I got to follow the trade action. Trade action says it's for real, so we better follow for now. But love the feeders, love the fats here.
Hog market, what a roller coaster ride on the week. Monday, big drop. Thursday, we got it all back. And then Friday, finally at the close, got a little follow through on Thursday's action. It looked like. What do you make of this hog market, DuWayne?
I have no clue, Jesse. How about that for a professional answer? It really surprised me. The crash on Monday did not surprise me. I actually was trying to sell the market, trying to get in there, thinking that it was going to kind of follow the same seasonal tendency we did last year and this market go lower. Well, middle of this week, we had an unbelievable rally yesterday, and then we followed through a little bit today and made higher highs from yesterday. So hogs are closing higher on the week, and I'm scratching my head, Jesse, because I've got cutouts grinding lower, cash going lower. I don't see it, and I don't get it. The only thing is I did see today a small little news article, and I can't really confirm a whole lot about it, but it sounds like McDonald's is maybe suing the pork backers.
Yes.
So
yeah.
That I don't know. That could definitely shake the market because this isn't, a group of producers suing the Packers. This is McDonald's suing the Packers. So maybe the McRib will be back, Jesse. I don't know, but there'll be news that you'll cover, I'm sure, moving forward on this. But I don't know why that would make the futures do crazy things. But quite often the futures market does the crazy things, and even experts, we find out a day or two later why.
Well, DuWayne, great stuff as always. Final thoughts for us before we wrap up the show today?
I think going back to what you mentioned, when you see these crazy markets like this and they're moving wildly for not significant reasons, go back to the spreadsheet and look and see, are you making money? Do you need to do some risk management going into the holiday season here to make yourself feel better? Nobody wants to come back 3 months from now and go, why didn't I do something? So you can be bullish and still use risk management for the next month.
Well, DuWayne, if folks want to talk to you, get some advice there at Bolt Marketing, what's the best way to get a hold of you?
Yeah, they can call us here directly, 605-448-2365, and they can always check our website out at boltmarketingllc.com.
DuWayne, always appreciate it. Good to catch up with you, sir. We'll talk to you again real soon, and thanks for joining us today.
Yeah, thanks, Jesse.
DuWayne Bosse, Bolt Marketing, joining us here today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.